Copper futures hitting new highs today, driven by a weaker dollar and increased demand. That's a theme we've been seeing for a lot of commodities: oil, gold, silver, copper. Will this run continue into the new year, or are we on the brink of a commodities correction? Joining us now, CEO and Chief Global Strategist at Euro Pacific Capital, Peter Schiff. Peter,
hey, Mark.
How are you? Good to see you.
Well, how are you?
You know, I want to talk to you about copper. Bob Pisani said the other day there's a copper ETF on the horizon. Also, other industrial metals will have ETFs like zinc and aluminum. And, you know, I'm no expert, but it seems to me that every time we've seen an ETF pop up in the commodities market, it has led to a run-up in the price of the underlying. Do you think that's going to happen with copper?
Well, sure. People anticipate the fact that these ETFs are going to be major buyers, and they try to front-run the ETFs. But, you know, I don't think that's what's driving the market. The ETFs are attracted by the high return. So the ETFs are showing up because people want exposure to commodities. But they're not the dog. They're the tail. You know, what's driving commodities is inflation. It's governments around the world, particularly the Federal Reserve, creating too much money, debasing the value of the dollar. You know, as we speak, the dollar is at an all-time record low against the Swiss franc today. It's at an all-time record low against the Australian dollar. You need $30 to buy an ounce of silver. You need about $1,400 to buy an ounce of gold. You almost need $14 to buy a bushel of soybeans. You've never seen these prices. Oil, you need $92 almost to buy a barrel of oil. But you're seeing these high commodity prices during a time where the economy is very weak. You know,
so that means as the economy strengthens, commodity prices go higher, right?
Well,
more demand?
The economy's not going to strengthen, especially with rising inflation and ultimately rising interest rates. There are a lot of people that are jumping to the false conclusion that rising interest rates or rising commodity prices somehow indicate that the economy is going to strengthen. They don't indicate that at all. They indicate more inflation.
I'm sorry, Peter. I'm told we're out of time, but I have to ask you this. If the economy is not going to pick up, then where's the demand for the commodities going to come from?
Well, it's going to come from all around the world. I mean, the Asian economies are going to pick up, but it's inflation. If the government creates money, prices have to rise to compensate for the loss of value of our money. And so what's going to happen is people are going to buy a lot less stuff, but the stuff they buy is going to cost a lot more money.
Peter, thank you very much. Always a pleasure to hear your view. Peter Schiff.
Thank you.